What's up, guys? It's Japa Rico here, broadcasting live from Hong Kong. And today we're going to do the episode number 4 of Make Your Money Work Harder. This is a webinar series together with the desk. And today we have our special guest, Mr. Gupta. He has worked before for JP Morgan and Deutsche Bank. Welcome to the show.
Hi, thanks Japa. Thanks for having me here.
And could you please introduce yourself? You used to work for these two banks,
Yeah.
and tell me more about your professional experience.
Sure. So at JP Morgan, I basically started on the fundamental research side, was looking at banks and insurance companies, the balance sheets, income statement, trying to basically assess whether our bank can lend money to these banks, so that credit issues don't happen between the two banks. So it was a very interesting role. I got to learn a lot about various banks, insurance companies, how to read these statements. Spent 2 years, 2.5 years doing that job. Then I moved into the markets role at Deutsche Bank, which was more dealing with hedge funds, trying to service them basically. So we extended leverage to hedge funds, and my job at Deutsche Bank was that we are able to finance the leverage that we are providing to our clients. So I did that for about 4 years. That job brought me to Hong Kong. Really love Hong Kong, by the way. So after that, I joined a startup hedge fund about 3 years ago. I did about 2 years there. I was a trader there, and basically just doing all the trading for all the orders that my PM was giving, providing him a lot of market color, in terms of what stocks are moving, why are the stocks moving, is there any news, or is there just some particular set of stocks that start moving together, like tech names, out of tech names, if only e-commerce moves names are moving, is there anything going on. So just try to speak to a lot of brokers, a lot of people on the street, if they know something about the move, because we see a lot of times, as retail, we'll see breakouts are happening, but those breakouts are happening because hedge funds are either buying or institutions are buying at that time. So that's the volume that comes up to aid the breakout basically. So in the last 1 year, I have been working on a strategy on my own. I left that job in Jan 2020 because I wanted to find another good one. But then COVID hit, so that's another set of story. In that last 1 year or so, I started developing my strategy, very inspired by William O'Neill, Mark Minervini, if you have heard of him. If not, please check them out. They do fantastic webinars. Mark Minervini, he still does quite a bit. And he's I think the best trader out there right now. Perfect setup. So I'm trying to learn from him. I even enrolled in his course last year, the master trading program that he runs usually around October or November.
And usually it's about 4,000 US dollars?
Yes, 4 or 5 thousand
US
US
or
dollars.
5,000 US
Yeah,
dollars, yes.
yeah. So that's a very good course. I mean, definitely going in, you think it's a lot of money to pay, but if you get a skill for life, that's really worth it. So I think that's how you should look at it. I'm not paid by him to promote his course. I'm just saying it's a very good course. And basically, so you just start following the people who follow this strategy, and it's really good. You start to see things in the market. That's the best thing. You start seeing like what's happening, what's not happening, where should you be putting money, is there a rotation happening, and all that stuff.
All right. I have a question. So, Gaurav, could you please tell our viewers, and I would like to say this to our viewers, that this session is an interactive session. So if you guys here who are watching us, if you guys have any questions, please put in the comment section below on Facebook, YouTube, Instagram. This being broadcast in many different sorts of media. So if you have any questions, don't hesitate. Please write your question here, and we are going to answer to your question. if we can, because if there are too many questions that we can't answer all. So, Gaurav, let me ask you a question. So, about hedge funds, can you please tell us what are they? Because many people don't even know what is a fund. So, what would be a hedge fund?
Right. So it's basically a investment vehicle for sophisticated investors, usually investors who have more than $1 million worth of wealth, so that if they put in $100,000 with a hedge fund, they don't lose it all, and they are kind of aware of what kind of strategies the fund is running. They are sophisticated in that sense. Plus, they are wealthy. So the hedge funds basically try to service these sort of clients, because they don't really know how to make money in the market per se. So everyone who builds wealth, they want to grow it. So the bigger size investors, they go with these hedge funds. Hedge funds imply or put to work their money with a lot of sophisticated strategies. But there are so many different kind of strategies in hedge funds. In a nutshell, basically, hedge funds is not an not a vehicle for retail guys. Um, but from a retail perspective, you could look at mutual funds or ETFs, which are also funds, but they are sort of, you put your money in and you can trade in, trade out of those securities every day. On the hedge fund side, you don't investors don't really get that kind of liquidity as well. Your money is generally locked in for some period of time.
Right.
So most of the times in hedge funds, an investor comes in, either your money is locked in for, let's say, a year or so, if it is a very fundamental driven hedge fund, because the fundamental hedge funds don't really want investors to pull money out when the market is crashing, because that's when they want to put their money to work. Fundamental hedge funds meaning people who do a lot of fundamental research on the companies. They go through the business, they go through the prospects of the business, and all those sorts of eventualities. But there are other strategies which are, quant trading funds. Um, they are trading for, let's say, split seconds. They're trying to beat any trader on the street.
Mm-hmm.
They see the orders. You might have heard about Citadel. Basically,
Citadel, yes.
they do market making.
Yes.
So they do
Oh,
market making.
Citadel was the one with the Wall Street bets, right? That one?
Basically the
Citadel,
Robin
right?
Hood guys.
Yeah,
Yeah, yeah. So they see the flow from Robin Hood,
Yes,
and
yes.
they basically make markets get 1 or 2 pennies here and there, and their whole business is based on the flows, and the the number of trades or the volume of trades. They just make money on that.
Right, right.
Yeah. So there are different kind of strategies. So if there is a very short term kind of strategy, so the investor can pull money in probably in 1 month's time. But I don't think any hedge fund allows you to pull money before 1 month's time.
Right, right.
Yeah, so that is one difference as well. Um, Other than that, I guess strategy wise, they employ a lot of strategies. So one is fundamental, one is quant, and everything in between. So from human research to computers trading for you. I mean, obviously, computers have been trained by humans,
Right.
either AI or ML these days. All
Machine
those strategies
learning,
are coming up a lot.
Yes.
So computers are trained in a way that, let's say I have a strategy, I write a code, and the ML will keep on improving it as it sees more patterns happening in the market. It looks at the probabilities of the trade succeeding, then it takes the trade,
Right.
and it manages risk according to the set of rules, and it evolves it basically. So I'm not sure if I answered it fully.
I think no. I think a lot of our viewers understood what you mean. So yeah.
Right.
There is a question, by the way,
Sure.
by Elias Pereira. He's asking, what do you think of future mini contracts? Do you trade them or not?
I don't. I mean, they don't. They don't come under my risk management. Sort of like on the PA side, on my personal trading side, I can trade them, but I think their size is just too much for a retail person. But if your account size is say 500,000 to $1 million, you can do that. A future contract, it's still huge. It's still a bit big. It depends on your risk appetite, to be honest.
Oh, alright.
In funds, yes, we use them to mostly to hedge our positions, but again, depends on the fund strategy. If there is a hedge fund who's just trading futures, so they are actually trying to exploit the bid offers. So those are mostly quant funds who will trade the e-mini futures and all.
All right.
What's the next?
There is a question by Benzindo. He's asking, hello, what's your opinion on the Forex market by increasing the diversification and trading of cryptocurrencies? Thank you.
All right. I think diversification is definitely good if you try to invest your money in different asset classes. So definitely, like when you are looking at your portfolio, look at it in a way of, okay, 20% I'll invest in FX, 20% I'll probably invest in equities, 20% in gold or Bitcoin or cryptocurrencies. Probably, if you're trading crypto, maybe you can decrease the size of that allocation to the portfolio
Yes.
because it's just too volatile and you never know when to get out. So, yeah. So a lot of people don't make money in that.
Do you trade crypto yourself? No.
I mean, I'm long some crypto,
Right.
but I don't trade it actively.
Right.
Yeah.
Right.
Because I just have a long-term view on Bitcoin. Is that the Fed or central banks keep on printing more money, and ultimately Bitcoin has that fixed supply, so its value should eventually just keep going up. There will be corrections and all that. You never know whether it was the top or not, but in the long term, it should pay well. So in terms of any portfolio, forex should be a part of the portfolio definitely. What I'm trying to say is just don't go 100% into equities or 100% into bonds or 100% into any single asset class.
So everybody should
Yeah,
diversify.
you should. Yes.
All right,
Yes.
right.
Yeah.
But don't you think too much diversification also makes the person get confused? Like if you do too many things, you go
Yeah.
crypto, forex, futures,
Yeah.
indices, and do this and
Yeah.
commodities, right?
Yeah, that can be an issue. So let's say you have $100,000 account, right? What you can do is maybe for $20,000 you can buy a bond fund,
Mm-hmm.
or you can invest in a bond mutual fund or a bond ETF. Another 20,000 or 50,000. If you want to trade equities very actively, then you can basically take 30-40,000 of that capital and trade it like that. And then let's say 10% in gold. Right now, I mean, gold has been quite a dog for almost 6-7 months. It's
Yeah.
just been going down.
Yeah.
But ultimately, when there is a risk of sort of opportunity, gold generally tends to pick up. But these days, Bitcoin has taken its place, or
Oh, yeah,
it's
of
trying
course,
to.
yes.
So, I mean, it's a very personal sort of question. So, whatever your risk appetite is, and definitely in terms of over trading, I think over trading is usually harmful for a lot of people because unless you are doing it full time or you have an idea of what your risk is, generally people become investors from traders. That's something that everyone likes to say, is that you take a trading position and then you are at 10% loss, and then you see it go down to 20% loss, and then you are just talking to yourself, hey, it will come back, and then you become an investor. You start thinking this is a good company, it will come back. So that's not a good like good use of your capital. If you see loss, you get out. I think at least that's something that I've learned from Mark Minervini and the likes, William O'Neill. They all stress on risk management quite a bit. It does not matter what instruments you're trading; those principles should definitely comply with. If there is a loss happening, get out, because the main aim is to be in the game,
Yeah, that's right.
right? If you blow your account, you just can't come back.
As a professional trader, so of course, it would be a rhetorical question because I already know the answer. But like you, do you trade like multiple positions at the same time? So you don't concentrate your risk on only one asset, right? You like
Yeah.
when you open your screen, you probably have like lots of different positions in lots of different kinds of asset classes, right?
Yeah. So I mean, there are always a lot of different positions. So I'll give you this answer in two respects. One is from hedge fund perspective. In a hedge fund, you can have 200 positions,
200 positions, yes.
but because you have an army of analysts analyzing those stocks,
Right.
those hedge
right.
funds are not taking positions just for the sake of it. Okay, stock is moving up, I'll just buy. It's not happening like that. So hedge funds have a reason to buy every position. So As a retail guy now, though, as a retail guy, I do not have bandwidth to look at even 20 companies or 50 companies fundamentally. So I don't know what the catalyst is going to be in terms of the stock going up or stock going down. What I'm following is price action.
Right.
So I'm trying to follow what these institutions are doing, and that I see in volume and price action. If these people are buying, I see the price going up.
So do you do so before you used to be more like a fundamental analysis sort of approach you used to have,
Yeah.
and now it's more like a technical
Yes.
analysis sort of
Yeah.
approach.
Yeah.
So do you think that's what most of us as retail traders should do?
I mean, no, I have seen quite a few retail traders who have made money doing the fundamental analysis as well. But what I found was that I wasn't that good enough on the fundamental side, because sometimes the catalysts take a long time to play out. So I invested in a really good company. It took 3 years for it to play out.
Wow.
So ultimately, you can make money, but in 3 years' time, you lose that patience, because then you see even the index is beating you. So that's where you kind of just lose the patience.
Right.
So from retail perspective, that's why you need to be either you have that long horizon, you're doing some sort of passive investing, you buy really good companies, sit on them, let them go. But still, I would urge to follow risk management. At least even in those companies, you should have a getting out price. If you buy those companies and let's say you bought something at 100, if it goes down at 90 or 80, you need to know where you want to get out, where you have to get out, that it is not playing out for you. It can come back up, it's fine. Save your $80 and put it in something else,
Right.
which is working, basically. Yeah.
Because I remember that Mark Minervini, he's a very technical person.
Yeah,
Right? I came
yeah.
across a few of his strategies. I
Yeah.
remember there is something called RS ratings or ratio. I
Yeah,
forgot.
RS.
Yeah, RS, right?
Yeah.
And then also the moving average, the
Yeah.
200 moving average, and a few other
Yeah.
things that he follows.
Yeah.
So, and that's how, based on the RS, that's how he differentiates like a good company from a bad company.
Yeah,
Right?
yeah. But I mean, in his approach, he doesn't care whether the company is good or not.
Uh-huh.
He's
oh, really?
yeah.
Oh, okay. Yeah,
He's
I
basically
misunderstood.
yeah. No, I mean he does in a way,
Uh-huh.
but his first criteria is to look for the trend. If you are buying stuff, the stock should be going up at least. It's above 200-day moving average or
So it's
50-day
a
moving
trend
average.
following,
Yes,
approach.
yeah.
Right.
Yeah, he has a very trend following approach.
Ah.
Yeah. And then he will take profits very quickly. So he's actually a trader. There are some people who do position trading,
Yes.
who buy the position, they'll go through the pullbacks, and they'll either add on the pullback, but they'll take the position to its ultimate trend end. Minervini keeps taking profits on this.
So he's more like a swing trader.
Yes.
Swing trader,
Yes.
right?
Yeah.
I understand.
So companies' fundamentals don't really matter to him quite a lot, because I've seen that he trades biotech, and I'm 100% sure he doesn't know much about biotech. But the number of stocks he trades and his risk management, top quality.
Wow.
Yeah.
Amazing. And tell me about what kind of markets, like I heard last time I met you here, you mentioned to me that you were mainly trading the Indian stock market.
Yes.
Has that changed since last time we met? Like how are you trading now? What markets?
Yeah, so now I have started focusing on Hong Kong and Japan as well. I started doing US in Jan with the same strategy, but as you would know, Jan to Feb to March, it was a very choppy market. All the breakouts were failing, and I'm basically a breakout trader.
Right.
On the retail side.
Right.
So I trade breakouts, but you need to have your risk management in place, definitely. And my risk management was knocking me out of every trade I was taking. So I couldn't really make money. So, but that was a feedback I took from the market. I stayed out.
Right.
Then I saw some setups happening in Hong Kong and Japan, some really good setups.
Yes.
And I was like, okay, why don't
Also breakouts, setups.
Yeah.
Right.
Breakouts and a lot of good trends happening. I saw, there were multi-year breakouts in some stocks. So then that means that institutions really like them.
Right.
Retail cannot push a stock up 100%. So there has to be institutional money flowing in, and you just follow the price and volume.
Right.
Follow the price and volume, that is the key from a retail perspective. Hedge funds don't look at that quite a bit. Some of the hedge funds actually follow the same strategy as well, but they are mostly US based hedge funds, and they're trading mostly in US markets only. Um, in Hong Kong and Asian region, I haven't seen a hedge fund doing this particularly.
Right.
Here, the hedge funds are mostly either into quantitative trading or they are more into absolutely fundamental stuff. So,
Wow, amazing. By the way, the Nikkei index has been doing very well, right? These
yeah,
past few
yeah,
months,
yeah,
right?
yeah. It's
Very.
been quite trending. So that was one of my clues that Japan is a good market to trade right now.
Wow.
So you don't really have to stay awake for the US market when you can get the similar kind of moves in Japan. Sitting in Asia, you trade Asian markets. You can sleep well at night.
Oh yeah, that's good for us then.
Yeah.
Who are
Yeah.
here in Asia.
Yeah.
Ricardo Z, it's not a question, I think it's a comment. Risk management is something that Brazilians don't care. Most people here don't do trade, they bet.
Well, good luck to them.
Good luck to them. Yeah, that's true.
Yeah. I mean, Bitcoin is a bet that paid off for a lot of people, but not every asset is Bitcoin, right? So,
What do you think about other cryptocurrencies, apart from Bitcoin? Let's say Ethereum or Dogecoin. Do you think like Dogecoin is gambling, or is it for real? Is
I
it
mean,
something that you would focus on? You would
no, I
no?
mean, Dogecoin was. So I'm not going to focus on Dogecoin. I don't want haters on this. But but it's mostly, I know it's becoming a cult because Elon Musk came in and he also just joined the party, and then a lot of people just followed him. But I don't think Dogecoin has any particular fundamentals unless a group of people who hold Dogecoin quite a bit, they start developing applications on Dogecoin because it's a blockchain anyway already. So if you can get developers to start making apps or dApps or whatever they call it, like Ethereum has a good ecosystem.
Yes. So I
So
think that's why Ethereum is so
yes,
popular because you
yeah,
can develop many sorts of applications
exactly,
for
yeah,
Ethereum.
yeah, yeah.
Uh,
I think Ethereum is definitely a good play in crypto if you are in crypto, because Bitcoin can go only that much up, but I think Ethereum is what people will use, and even in terms of uh, moving Ethereum from one wallet to another, that's very quick compared to Bitcoin. At least in my experience, that has been.
oh yes.
Yeah.
How about Binance? Because Binance, I also have seen people developing many applications for Binance. Binance also has its own cryptocurrency,
Yeah,
right?
Binance Coin.
Yeah, Binance, yeah, the
Yeah.
coin. And I also saw the Pancake Swaps, like, right? Is a website where people can trade based on the Binance blockchain,
Okay.
right? So
I
it's
don't know.
smart blockchain.
Right.
So
I haven't followed that, so I might not be able. I might not be the right person to answer on cryptos.
Ricardo Z is asking, Japa asking about Cardano,
Love it.
ADA, and proof of stake protocols.
Yeah, love Cardano. It's a very good project. Charles Hoskinson is a really good guy. They always keep coming out with projects. I know they've had delays, but I think that blockchain is really good. I own some, and I stake it with some stake pools. You get like 5% yield also on that, so it's really good, I think.
Wow.
Yeah. So I like only Bitcoin, Ethereum, Cardano from my limited knowledge. I want to learn a bit more about yield farming, which I think is the in thing, like Uniswap, Solana.
Uh-huh.
Solana has been going up quite a bit. Then there was one more.
Recently, I also
Yeah.
come across this new, I think it's a new term called IFO, Initial Farm Offering.
I don't
I,
know.
you know, I don't, because now that you mentioned about like farm, then
Yeah.
I thought about it because
Right.
like yeah,
I
when
don't know.
I was searching the web and I came across this new
Right. I don't
term.
know.
All right.
Yeah.
So Cardano is relatively old, right, compared
Yeah.
to
Yeah.
Doge and
Yeah.
other
No, actually, Doge was
cryptocurrencies.
also around
Uh-huh.
2017.
Oh, really?
Cardano is probably
Uh-huh.
around 2016, 17 only. Yeah. So they were all formed in the last, last crypto bull market, which was 2017.
All right.
Yeah.
What do you think of NFTs? Do you think NFTs are something that are going to stay, or is just like a temporary fad? It's just like for maybe a few more months, and then it will go away, or is it something serious? Like, are you interested in NFTs? Have you been investing?
No, I haven't invested in NFTs, but definitely want to learn a bit more. And I'll actually find some time to go through your last interview. They touched upon NFTs quite a
Oh,
bit.
yeah, yeah, yeah.
Yeah. So I think some parts of NFTs will stay. Again, from my limited knowledge about the space, is especially the usage in gaming. I've heard that people can lend experiences. Okay, here is my sword, which gives you access to 10th level of a particular game, and I can borrow that. That guy can earn 5% or 10% for just lending it for 1 or 2 hours to me, because I want to experience, as a level 1 player, I want to experience what's there in level 10.
Right, right. So
Right.
like smart contracts,
Yeah,
right?
yeah, yeah. So stuff like that can happen probably. In art world, there are some people who are getting very excited about it. A lot of people are faking it too. So I'm not sure. Definitely there will be some scams. Every bull market has it. But I think the space in general is becoming more mature
Yes.
than at least 2017. A lot of sophisticated investors have also entered the arena. So,
Yes.
like a lot of hedge funds have started, regulators are becoming open to accept, crypto as an investment vehicle. I think China said recently that Bitcoin is a investment vehicle. So it's not a currency, but it's an investment vehicle. So that is actually very good, I think. So one of the regulators who is accepting it as an investment vehicle. So I think it's only about time everyone has to.
So do you think China has changed its position towards Bitcoin and cryptocurrency in general? Because I remember a long time ago, a few years ago, like China prohibited the use of Bitcoin, right?
I'm
So,
not sure if they
uh-huh.
prohibited it. I'm not sure if they did that. I might be wrong, but I haven't really followed the space a lot like that. Um, I think they've always maintained the stance that we want to know more, and then we'll take an appropriate action.
Right.
Yeah.
By the way, recently India has prohibited
Yeah.
cryptocurrency,
Yeah.
right?
Yeah. Now they're
And it
evaluating it
was
again.
like what, less than a month ago,
Yeah.
right? And
Yeah.
then what happened after that?
I don't know. It's been a bit of a ping pong in India. So they are now reevaluating it. Ultimately, all the governments know it will happen. They just want to bring taxation into it. So once they bring taxation and they find ways how to tax people on capital gains, on cryptos, I think it should be sorted. Yeah.
All right, because the first time I was reading about this piece of news from India,
Yeah.
and then it was written that people may even be prosecuted and put in jail, and I was really
Yeah.
shocked. I was like, wow.
Yeah, yeah. I
That's
mean, they
really
did say,
serious.
okay, you have this window to declare your crypto holdings, something like that, and you'll get some, I don't know, tax benefit. Or I didn't even follow the news because India is so far behind right now. They need to really pull up their socks on the crypto stuff. Um, but it's fine. US is coming up. Lot of other Japan. It's been legal in Japan for a long time, right?
Yes. And
Right.
the Japanese government officially started, they made a law
Yeah.
for cryptocurrencies,
As
and they
illegal.
allow, yeah, it's
Yeah.
a legal tender.
Yeah.
And they've been, and it's been already a few years, right?
Yeah,
Yeah,
exactly.
yeah.
In 2017, I
Right.
remember someone was telling me they bought a TV with it, and I was like, "Oh wow, okay, so you can buy real things with it. It will become a major currency, you know." So
I think Japan was one of the first, one
Yeah,
of the first
yeah,
governments
yeah,
to allow,
yeah,
like
yeah,
officially
yeah,
authorize the use
yeah,
of cryptocurrency,
yeah, yeah.
right? There is a question by Ricardo Z. He's saying, every day we have news about NFTs. Yesterday, the rapper Eminem has launched his collection of NFT. Many people from arts are earning with it. Even many collectors are too. NFT is awesome.
100%, 100%. And
Yeah.
I think, especially in music, there's a lot of uh, NFTs are giving a lot of ways for these people to make money. I mean, Eminem is anyway very famous, but a lot of new artists who are coming up, they'll be able to sell their productions using an NFT because it's only one and the only kind sort of piece on the blockchain. You can sell rights to it. I think that's really good. They can cut out the middleman in terms of your distributors and stuff like that because they take a lot of
Yes.
cut in the whole industry. They take I've heard they take like 80%.
Wow.
So you make an album, 80% goes to the distributor. Artist gets only 20%.
So do you think in the future it would be direct, like they will cut the record companies, they will cut the middleman, and
I don't know if they
directly
will.
from the
Yeah.
song, like the singer or the songwriter directly to the consumer.
I don't know if they will completely cut it, but definitely they'll start eating up into that space.
Into
So
that direction.
yeah, yeah,
Well, very good. I have a question. It's a personal question from
Yeah.
myself. I want to ask. So before you had access, of course, you were working for banks.
Yeah.
So you had access to the Bloomberg terminal.
yeah,
Now you don't.
yeah.
Has it been a huge, like a drastic change for you, like not being able to use the Bloomberg terminal, or actually you don't really no, like it's just a minor thing and you didn't change your life that
Yeah.
much.
Yeah, I mean, in the beginning, it seemed very hard. But then ultimately, I found that there is just so much information anyway available for the retail guys today. It's a wonderful time to start trading because you go to websites like investing.com, TradingView,
Yes.
you get free data, live data in most of the markets, especially US and India, definitely it's live data. And even if you want to get live data, at places like FinViz, I think you get it for $30-40 a month or something like that. So that way is really good access. News you can find on Google or any other place, or you can even make a news aggregator.
Right.
So there are now aggregator sort of applications where you can put in FT, Economist, or whatever websites you want to put on there, and just put in your keyword. It will search across all of them, and you can read all the articles together. So a lot of aggregators are coming up. You can read those. I think retail has access to a lot of information these days. The only thing they do miss is the expertise to analyze the stocks themselves.
I found one that was very similar to the Bloomberg terminal. It's called Koyfin, Koyfin. Koyfin.
I haven't seen it.
Yeah,
Right.
it was pretty good. It also like works as an aggregator, so you
Right,
can get
right,
like
right.
articles from different sources and put them
Right.
together.
Yeah. I think in Bloomberg you just get a lot of information about a company in one place. That is the best thing about Bloomberg. So you can get the financial statements in one place. If there is some broker research, there is another page for that. What is the earning estimates? You have all of that information. But there are few websites. If you look for it, you will be able to find all of that very quickly. Especially like if you're trading Hong Kong stocks, if you go to AA stocks or ETNet, really good information there. I don't think any Bloomberg has an edge over that, basically.
Oh, right.
Yeah,
Wow. So I think things change a lot.
Definitely,
Like for
yeah.
this past
yeah,
20, 30 years, right?
Yeah.
Because, yeah. I remember like a long time ago, let's say like 20 years ago, like Bloomberg really had that how can I say, like a very, like it was ahead, like
Yeah.
a huge step like
Yeah.
ahead of the
Yeah.
competitors.
yeah.
Yeah, so everybody wanted to have
Yeah.
a Bloomberg terminal,
Yeah.
but it seems like it's not the case nowadays, right?
I mean, it's not a requirement, but on the institutional side, you still need it because all your broker access is through Bloomberg. Everyone has it, so you are all connected through Bloomberg. There is Bloomberg chat where everyone talks. It has a history that we can prove to SFC anytime. or any regulator. So that way, I mean, Bloomberg has its utility, but individuals don't need it.
Right.
Yeah.
Okay, guys. So I think if you guys don't have any more questions, let's see. Hey, by the way, I was thinking when you told me about like different sorts of articles from different sorts of sources, I remember you also have your own website where you write about the financial markets.
Yeah.
Can you tell us about your website?
Sure. So I started writing on this website in 2017.
What's the name?
Investing-class.com. So you can visit that. I started writing for the common retail person, like, when you are investing in a company, what all things you should look at. Think of it as a business owner. Is the business doing well? Because most of the, traders don't really make money because they don't follow risk management. So if you are going to invest your hard-earned money, at least do some research on the company and invest it for the longer term. That way, right? So I started pointing out things, what you should look at. And then ultimately I found a job in the hedge fund. I was working there. Then in the last 1 year, I have started writing on the markets, looking at the trends happening. So I want to go with the flow. I want to see where the trends are forming, where I can get the right entries. I follow Japan, Hong Kong, China, India, US. And I try to put out articles every once in a way when I get time out of my trading itself.
Yeah, by the way, I have a lot of friends who are already have been following your website for a few months now.
Right.
Yeah.
I hope they made money.
Yeah, so once again, thanks a lot for coming to the interview, Gaurav. And thanks, guys, for watching us live on YouTube, Facebook, and Instagram. I hope you guys had a great time with us. I certainly had. And I will see you guys in our next live event.
Thanks, guys.
Thank you and goodbye. Bye.